Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's edition of CEO and Market Expert Interviews, my first-time guest is George Glasier. George is the CEO of Western Uranium and Vanadium, a company with uranium and vanadium assets in the U.S. George, welcome and thank you for coming.
Well, thank you. It's a pleasure to be here with you.
The pleasure is all mine. As I do with all my guests who are for the first time in my show, I would like if you could give us your background, your path to uranium business. Please expand a little bit on your uranium path.
Okay, I'd be happy to do that. My career in uranium started clear back in the late 1970s with a startup uranium company called Energy Fuels Nuclear. That was a privately owned company that was started by a pioneer in the industry called named Bob Adams. He had established a company before that called Western Nuclear, and then established Energy Fuels in the mid to the late 70s. I was one of the first employees. I was a lawyer. He hired me basically to, permit the mills and the mines, and then I took over the marketing. That company was a very successful uranium company. We were twice as big as anybody in the United States in the early 80s. We built the White Mesa Mill at Blanding, Utah, the one that now is owned by the second Energy Fuels. But the first Energy Fuels was sold in 1991 because of the death of the founder, Bob Adams. We sold the company. The uranium prices were down. At that point, I got out of the business for a while because of the low uranium prices. I became a cattle rancher in Western Colorado. I bought a cattle ranch. I was a minority owner of that company, took my proceeds and bought a cattle ranch. And then in 2006, uranium prices came back. So I formed another company and I named that company Energy Fuels. I am the founder of the current Energy Fuels. It had such a great reputation. And that was my second start in the business. And then in 2014, I left Energy Fuels management in 2011. And in 2014, they came to me to sell some of their assets. I guess they needed cash. We did a private transaction and purchased what we figured were the best assets that Energy Fuels had, which included the Sunday Mine, the San Rafael projects, and some others. And we acquired those projects in a private transaction in 2014, which set the base for this company. And that was called Pinyon Ridge Mining. A year later, we decided it was in our interest to acquire a company called Black Range Minerals. It was an Australian listed company. I had done some consulting work with Black Range, so I knew them quite well. And we decided at that point to acquire that company through a share transaction. So we needed to become a public company. That's when we listed on the Canadian Stock Exchange and completed the transaction. I believe it was in August of 2015. That completed our asset acquisition. Along with acquiring Black Range, we acquired the rights to a technology that we believe reduced the cost of production of uranium substantially, and that was called ablation. We've changed the name of that to call it Kinetic Separation today. But that technology was a key part of the acquisition of Black Range. So that completed our assets. And that was kind of a background of where I have been and how we established what is now Western Uranium Vanadium Corp.
Wow, George, that's very impressive background and a lot of uranium experience on your back. Great to hear. Before we touch on the company projects and developments, I want to hear your opinion on the status of uranium market and the question that is asked a lot of these days: why are uranium equities not following the uranium spot price? What's your take on this?
Well, obviously, the uranium price is now starting to reflect the real value of uranium and the real cost of producing the commodity. And again, I think we're going to see a substantial increase even from now. Why equities are not following, that's a good question. You take a look at the overall stock markets, they're up and down. We've got, uranium is an exception in some ways, but it's still a traded commodity. And even though it's probably the best commodity to invest in now, when investors are not doing well in their other shares or stocks, they're probably not prepared to do much in the uranium sector. But I think that will change. The equities are going to follow this price increase. In the past, sometimes the equities have moved faster than the price. So we
Yeah.
just have the opposite now.
Yeah.
But that will change. Equities will recover, will follow that price eventually. I don't know whether it's early next year, but they will. So we're not too concerned about that. They will follow. Of course, now it's a good time for investors if they have the desire to get into stocks, because most of these uranium stocks are probably undervalued. They'll get full valuation when we catch up with the price of uranium.
Yeah, agreed 100% about that. What about your vanadium market? What's the current status for vanadium?
Well, vanadium, as you know, has dropped in price over the last 6 to 8, 9 months, and it's primarily tied to the economy of probably China. The biggest use for vanadium right now is alloying steel. When construction slows down around the world in China and other places, the use of vanadium obviously is reduced. Now, we think that's temporary. Once the world economy recovers, China starts building again, they start building in third world countries. Vanadium is a critical element to alloy steel.
Yeah.
So we believe that will drive the price of vanadium up, to maybe not to $30 that it was, a few years ago, but certainly into the 10 to the low teens. And that's a level that the world can produce vanadium to meet the needs. At $6 or $7, you're not going to see any new vanadium production. It's way below the cost of new production, and probably almost below the cost of a number of the existing mines.
Mm-hmm, mm-hmm. George, has your company sold any vanadium in the last 2 years?
No, we have not. As you probably know, we had a contract to sell uranium, but we have not sold any vanadium. We're holding off. Obviously, we don't have any physical uranium or vanadium in the form of V2O5 to sell, because we're stockpiling our ore. So we've not sold any vanadium.
Mm-hmm. Okay, let's discuss your projects. Your company has 6 projects in the portfolio. Let's start with the Sunday Mine Complex. Can you share us what is the current status of operations there?
Well, that mine is actually in production. That's a 5-mine complex. And we started the operation with a contractor a couple of years ago, and then we switched to a company operation by acquiring equipment and acquiring the miners and the staff we need to operate that mine. But we're in that mine operating right now. I don't know, one of our press releases some time ago, when we were actively doing some mine development, we were intending to produce ore. But in a period of 2 months, we produced almost $10 million worth of ore in the final product. And what happens is that we have nowhere to stockpile that ore except at the mine. So we're not actively trying to produce a lot of ore. What we're doing is developing new areas to mine. One of them is there's a technical report that was done on a small drill out done by Denison. Denison was operating that mine back in 2009. They did a small drill out in front of where they were mining. And so we are developing to that ore body right now. The ore that we mined and stockpiled in the mine was in an entirely different area, not even related to that technical report ore body. So that mine has a significant, reserve in it, which is not reported on any technical report. So what we're doing is we're doing mine development. We're doing a little bit of ore production as mine development occurs. And we're doing a lot of underground drilling. We acquired several months ago a drill that's capable of drilling 4,000 feet underground. And rather than drilling from the surface, it's much more economical to drill underground to establish the additional resources in that particular mine. So that's what we're doing in the Sunday now.
Okay. Can you tell me more about the stockpile you have, some quantity numbers, the value of stockpiled ore, and what is the grade of that ore, for example?
The grade of that is about 1%, a little over 1% uranium, and probably 6 times that vanadium content. The ore grades in the Sunday mine are 6 to 1 on vanadium. And so we've got 1%, so we probably got 5 or 6% vanadium. Very, very high grade, but we didn't intend to mine high grade. It's just going to be a high grade mine. Now, there's also some lower grade mine ore in there, which we can blend down. We probably won't ship 1% to our processing facility, but there is a stockpile outside of the mine of about 100,000 tons of what we consider low grade, which is about 10 hundredths.
Yeah.
In Africa, that's high grade, but to us, and that was just stocked outside of it, primarily by Union Carbide when Union Carbide operated this mine. Because they had a lot of high grade and they just left that 10 hundredths. But so we've got so much high grade now in this one ore body, we'll probably down blend some of that before we ship it to our mill.
Okay, but what are the production plan numbers, if you can talk numbers for the, let's say, next year for production? What are you expecting?
Yeah, we plan to be in full production in about a year and a half. And the reason for that is we'll be able to start stockpiling the ore at our mill site then. And so initially the production from the Sunday mine is scheduled to be about 500 tons of ore per day. And we'll work 7 days a week, 350 days a year. We'll take a couple, 2 weeks off vacations. But based on that and the grades that we expect, that'll produce a little over 1 million pounds of uranium and about 6 million pounds of vanadium.
That's a great number.
And that's the initial stages of production. Moving that up in 2 years, we expect to be about 800 tons a day out of the Sunday mine, and an equivalent quantity, probably about 1.5 million pounds of uranium and probably 9 million pounds of vanadium.
Okay. In your June 21 news release, you mentioned that you would purchase a new drill for underground drilling at the Sunday Mine complex. Did you start using that drill?
We started using that drill about 3 weeks ago. We were waiting for the probe. We needed special instruments to probe. We both core drill with that, and we also plug drill with it. Most of the time we just drill a hole, and we didn't have the instrument yet to log the holes. And what you have to do, you have to leave the drill steel in there, and you log through the drill steel. So even though we could have started drilling, we didn't have that particular instrument. Now we do it. We've drilled a number of holes. We've also done some core drilling. We will be reporting the results of that. We found a significant amount of ore that we didn't even know existed with that drill in just the first 3 weeks that we've been drilling.
Excellent.
It's an interesting situation. That drill is made in Sweden. We ordered that drill through the distributor in Idaho, and there was an 8-month lead time to get it. And we put in our deposit, and then that company came to us and said they had one of these drills, the next model larger. It was at a gold mine in central Colorado that had shut down, had never been used, and they didn't pay for it.
Unbelievable.
So they gave us a special deal on it. And that's why we got the drill so fast.
Excellent.
8 months for a new one. We bought this one, which is a brand new drill, but it was one model larger, but it certainly works for us.
Yeah, you can say that you were lucky here, right?
Right.
Yeah. Can you provide us some details regarding the mill, a new mineral processing facility in Utah? How is the construction going? Please expand a little bit on that.
Yeah, the mill is, of course, a key part, of our plan, to turn these assets into cash, and that's one of the things, we are going to be a cash flowing company, unlike most of these exploration companies. The company value will be based on our significant cash flows in a year or 2 or 3. Yeah. So the mill was a key part of this. We looked for mill sites, primarily in Western United States, primarily in the state of Utah, with the idea that it would be a good jurisdiction. You need 3 things key for a mill. You've got to have road access because all the ore is hauled by truck. You've got to have commercial power. If you don't have commercial power, you're probably not going to get your air quality permits. And you have to have water, processed water. We needed those 3 things. And the 3rd or 4th thing you need community support. So we found all of those 4 things in a site up by Green River, Utah. We acquired the site. We have now contracted with all of our various disciplines, the contractors. PSE out of Salt Lake is doing the engineering for the mill. They're very experienced with uranium mills. They've worked on the White Mesa mill. Of course, they worked on the Shooter and Canyon mill, and now they're in the design phases for our new mill. Our new mill is going to be different than anything that was ever built before because of our technology, which is the Kinetic Separation technology is going to be used at the front end of the mill. That technology will reduce the mass that you put through the mill by up to 10 times, but it'll easily reduce it by 5 times. In other words, if you have 5 tons of rock or ore coming into that front end of that facility, you put it through the kinetic separation, you'll only have 1 ton to go through the mill. So our plan is to initially build a mill that'll process about 200 tons of ore a day. That's 1/10 the size of the White Mesa Mill, the 2,000 ton a day down there, and about 1/3 of the size of the Shooting Mill. So the cost of building this is going to be substantially less, but also the cost of milling, it reduces the cost of milling considerably because you're not putting nearly the tons through the mill. And if you know anything about milling, most of milling costs are related to the tons you put through the mill, not the pounds or the mineral that you get out. There's some related to that because acid consumption is higher with more mineral, but most of the cost is related to the tons. So when we put fewer tons through, we reduce the cost significantly. So the project is on track. We're doing database collection now. We've got about a year's worth of data that we're going to need before we submit our application. So by the end of 24, we'll be ready to submit our application to the state. And meetings with the state that we've already had indicate they'll probably be able to act to that on that if the data is all complete, probably within 6 to 9 months. So we should have our permit to build by mid to the third quarter of 25. We expect it'll take about 6 months to build it. Okay. We've had contractors look at it. It's not a complex process. The equipment is generally available for mills. Mills are not, they use concrete, they use steel, they use things like that, piping, electrical. Most of that is readily available. So we think we can build it in 6 to 9 months and have it in production in the second half of 26. Our initial production, as I said, will be out of the Sunday mine. We will be stockpiling ore. The initial production will probably be 1 million pounds of uranium and 6 million pounds of vanadium, and moving up as we increase production out of the Sunday.
Okay, just to return on the financing part, can you talk a little bit more about the numbers and how do you plan to finance that?
Well, if you take a look, we've done our own internal estimates on this, and PS&E will do the estimate for us. But if you take a look at a couple of statistics that are out there, one is on the Shooting Mill, and it's a 750 ton a day mill. Now we've looked at that mill and so has others. And that mill, the buildings can be used, but nothing else there is usable. And McCoy might disagree with that, but that's based on what other people have told us. You're going to have to replace all of the equipment in there because it's old, hasn't been operated. So, the buildings are usable, but that's one of the lower cost components of building a mill. They came up with a cost of around mid 66 million, I believe it was, to refurbish 750 tons a day. And Mark Chalmers from Energy Fuels made a statement on one of his recent interviews that if you had to rebuild the White Mesa Mill, 2,000 tons a day, it would cost $500 million. I don't know where he got that number, but that's probably close. It may be 400 to 500 million.
I believe so, yes.
So if you take a mill that's 1/10 the size of Blanding or 1/3 the size of the Shooting Mill, we don't use that cost. We're estimating about 50 to 60 million to build our project. And I think that's a reasonable estimate based on the size that we're going to build.
Yeah.
One of the things that we have is considerably smaller. When you have a small mill, you have smaller areas. And I know somebody, I think it was Corey in his interview, referenced the Pinyon Ridge Mill as the mill that I permitted in Colorado a few years ago when I first started Energy Fuels. And he said the cost of building 500 tons a day was, he thought, 125 to 150 million. It was actually 100 million. And that was a detailed estimate done at that time back in 2007 and 8. And the interesting thing, of that 100 million, almost 1/2 of that, 50 million, was for the tailings in the evap pond. And so what happens, we're going to use a technology, we're going to reduce the use of the water. Our evap pond is going to be considerably smaller. It's a little more costly up front, but your capital cost is reduced considerably when you don't have the big areas of evap ponds and especially tailings. And the way to finance it, we've looked at several ways. We've got several people looking at it now. It'll probably be on some debt basis. We've looked at forward sales of uranium. Interestingly enough, with the first Energy Fuels back in the late 70s, we financed a lot of things with forward sale of uranium, which was a great way to do it. You basically enter into a contract, you get paid for part of it up front, and you deliver. The other way we did that with the first Energy Fuels, we actually were able to borrow uranium. We borrowed uranium and sold it, and then replayed those loans in uranium. So it's a form of debt financing, but it's with uranium. And we believe that's a possibility also. We've been talking to some of the people that hold, big stocks of uranium, and they can put them into play as long as we can show we can produce it to return it. So financing the mill isn't going to be a problem. It'll be done with a form of debt mostly. We've looked at joint ventures. There may be a possibility of joint ventures, but right now we're looking, primarily at financing it through debt instruments.
Yeah, that was part of my next question. Is there a possibility for a joint venture?
The cash flow, we'll give you the detailed estimates on this later, but based on today's price of uranium, we did our economics based on $50 uranium and about $10 vanadium. And the mill paid off in 2 years with that. It's $75 uranium and say $8 or $10 vanadium. The mill pays for itself in about 1 year. So, it's going to be easy to finance it because it's a cash cow. It makes a lot of money. Our process and the high grade ore you put through it, obviously.
I can imagine that. Yeah. George, what permits and licenses are still required, and how long does it take typically to get them?
Well, the key licenses that are going to be issued by the state of Utah are obviously, the radioactive materials license, which is the key one.
Yes.
The groundwater protection permit that the same agency, and then there's the air quality permit. And those are the 3 key permits. Of course, then there's the building permits. We are within the town of Green River in an industrial site that's already been designated for industrial uses. In fact, within this site, there was a nuclear power plant planned, not built. There was a oil refinery that was permitted and not built. So it's a site that's ideal for this type of use. Those are the 3 main permits, and then building permits from the town of Green River. And those permits will all be issued within that time frame that I mentioned. That once we submit the applications, the air quality permit won't take that long. Once we submit it, the radioactivity mill license will take probably the 6 to 9 months. But it's not a long process, and it costs money to do it. You have to do it right, comply with the regulations, which we will. And have numerous meetings all along. Now, we've hired the very best consultants to do this, and we'll have a list of those out on a press release soon. In fact, there's an on-site meeting on November 2nd with the state and all of the consultants, to make sure everybody is on board with what the state requires. We've met with the state several times, so we know, and now it's kind of a group meeting, but that's moving forward very quickly. And we're in a hurry to do it. We want to get into production. We think the shortage of uranium is going to be fairly significant in the next 3 to 5 years. And those that can produce during that time are going to benefit fairly substantially.
Yeah. George, what about the tool milling agreement you had with Energy Fuels? Is that option still active? Is there any possible alternative to having the ore milled at Energy Fuels?
No, we did have a tolling agreement when we first bought the properties from Energy Fuels, but that mill was not operating, and that was a limited term on that. And since it wasn't operating, we didn't ever start the mine to ship anywhere because the prices were low. Yeah. But we do not have a tolling agreement with Energy Fuels. We don't expect they're going to be tolling ore. They say they are, but it's doubtful. We don't look at that as very, that's not an option for us, and neither is shootering. We make so much more money shipping it to our own mill. Why would you ship ore even selling it to them? So our mill is going to be such more economical, because of the type of mill it is and the high grade ore we're going to process. You don't want to put any ore through a mill. And of course, the Energy Fuels mill, it's doubtful that it can recover the vanadium now. I wasn't at the tour of that mill a couple of weeks ago, but somebody who was there said they've converted the vanadium circuit to rare earths. And I think their goal is to be a rare earth producer anyway. They'll probably make a lot more money in the rare earth business than they will in uranium, especially since they've gotten rid of most of their, good uranium properties. They have a few left. And so we don't look at energy fuels as an option. We don't think the Shooting Mill is a viable option either. So we don't have a choice, but we will open our mill to others. In fact, we're going to look at joint ventures with others to bring them in. I might mention the first Energy Fuels, we built the White Mesa Mill, had a significant program to support a lot of other independent miners because that mill needed a lot of ore, 2,000 tons a day. We don't need that much ore, but again, we will open our mill to others for tolling, or we'll have an ore purchase agreement. And our mill, that will encourage others, I think, to start up their mines.
Yeah, a lot of mines in surroundings to process ore. Okay, let's move to your San Rafael uranium project that is located in Emery County, Utah. What is the current status there, and what are the plans for this one?
Okay, that's located about 4 miles from our new mill site. So the mine plan is being designed right now with that. Once we have that done in about a month, we will be submitting our applications and putting in our baseline data collection for that. So that'll take about a year and a half to permit that mine. And then, of course, that's an undeveloped property. We will then start the mine development. So we expect to have ore ready for that about the same time that we've got the mill ready, probably late 26, early 27. Initially, the production out of the San Rafael, because we'll initially put in one shaft. It'll be a shaft mine. One shaft would probably only produce 200 to 300 tons. That's about all you can do unless you build a huge shaft, which is not economical for these smaller ore deposits. So that one will produce maybe 300 tons a day, maybe, and it's a little bit lower grade. If you look at the technical report on that one, that could probably produce about 500,000 pounds of uranium and less vanadium because the ratio in that area is not as high. But that'll be our secondary production coming in late 26, maybe early 27. I might mention, the key is, mills are important, but the most important thing is having the resource and being able to mine it. One of your interviews stated that mining is not very sexy. I don't know if they meant that it wasn't very important, but mining is the most important of all of those activities. You can build a mill, you got to just time and money, but you cannot necessarily replace and establish a resource. So, and mining it, we found out the lack of equipment, the lack of employees is going to hamper a lot of new production, not just in the US, but around the world. We have acquired enough mining equipment to, do our first probably 400 tons a day out of the Sunday mine. But mining equipment is expensive, difficult to get. And then employees. We just this week hired 2 and interviewed 3 more. This little company started a year and a half ago with 7 employees. Today we have 25. In a year from now, we'll probably have 45. And most of those will be our miners that we're hiring for the Sunday mine. But that's a challenge to find the equipment and the miners to start these mines.
George, but have you considered the potential of in situ leaching for your uranium deposits in Utah? If so, what are the geological and environmental factors influencing this decision?
For additional deposits, well, this area has a number of deposits. There's no doubt about it. We control some of them, other companies control them, but this area has a significant resource base of the uranium vanadium. It's held by various companies. And when the price reached 75 or more, it becomes economical as long as there's a processing plant. Without a processing plant, you don't have anything. And right now, there is no processing plant. So what we're doing is we're talking to a number of parties right now, whether we joint venture, whether we acquire them, and they're smaller things. But there's no lack of uranium in our area. There's a significant resource here.
Yeah, but sorry, but my question is there a potential for in situ leaching on those properties?
Leaching? No. In situ leaching does not work on these projects. The reason is they're too tight and they're not in the water table. In situ leaching works only in certain geologic formations, and we don't have that here. Ours are very tight, hard rock formations, so in situ leach does not work here.
I mean, specifically in San Rafael uranium project. There is no chance.
San Rafael, it will not work in San Rafael.
Okay.
It's the formation is too tight, the permeabilities are low, and it does not have a confined water table. It has a little bit of water in it, but it's not amenable to in situ leach. Interesting, 80% of the deposits in the United States are not in situ recoverable. People don't know that, but most of it's going to have to be done by conventional mining.
Yeah. Wyoming is the place where
Wyoming and Texas, parts of Wyoming, parts of Texas, not all of Wyoming.
Yeah, not all. Yeah.
A lot of Wyoming is got to be conventionally mined.
Yeah, I know.
I realize that, but the Sheep Mountain that Energy Fuels, that's got to be conventionally mined.
Yeah,
and I'd say at least half of the deposits in Wyoming are conventional.
Yeah, George, you also own Taylor-Hansen project with about 90 million pounds indicated and inferred resources. What are the plans for that property, and how can you bring value from this property to the shareholders?
Well, that's a little bit higher production cost, but now we're seeing the uranium getting to that level. We're now starting to do the initial plans. Now that project could be in situ mined. That one is in the water table, and that's one way to mine that. Now, whether that's the best way, there's also borehole mining, and that's what Black Range was considering back before we purchased Black Range, using the kinetic separation technology and borehole mining. So we're looking at that. We're looking at the in situ possibility now. But now that one is, the prices are moving towards $100, that one makes some sense. We haven't spent much time or money on that one, but that's got a big resource. And that's certainly one that we're going to now be looking at since we're so far along with the Sunday and the San Rafael is moving and the mill site's moving. So the Hansen-Taylor certainly will be our next major project we're looking at bringing into production. But it's that one's years away. That's going to be a little bit more, even though it's a great deposit. It's going to take a little bit more time to determine how to mine it, and a little bit higher prices are required for those type of deposits.
Yeah. What about, I don't know if I pronounced it right, Sage Mine, right?
The Sage?
Yeah,
the
Sage Mine. Yeah. Please expand on it.
Sage Mine is a small mine. It has a mine permit on it. It hasn't been operated for years. That mine could best be combined with one of the projects that Consolidated has. They bought part from it. We first bought the Sage Mine, then Energy Fuels sold what they called their upper part of that to Consolidated. We've talked to Consolidated about a joint venture. It would make that a bigger project. We could go in, the Sage Mine could probably mine 30 to 50 tons a day. It's a small mine. It's got a resource of probably 1 million pounds. But combine it with the Consolidated one, we probably have a much larger resource. And it makes a lot of sense. At one time, that was a combined project with Energy Fuels. We only bought the Sage part of it, and then they later sold what they call Sage Plains to Consolidated. So we've talked to Consolidated. It makes sense to probably combine them. We're not quite there. We don't need that yet, but it's a good smaller mine. It would be an excellent project down the road.
I would like to ask you if you can expand a little bit more about kinetic separation technique you have and the value it adds to your company. If you can.
Yeah, kinetic separation was developed by some scientists up in Casper, Wyoming, and then it was basically sold to Black Range through an investment Black Range made. It's a physical process that takes the material and basically you crush it up to about 1/4 of an inch, and then you drive it and put it into water and you create a slurry. And then with high pressure pumps, you drive those particles against each other. And the concept is when the particles hit each other, on secondary ore deposits, the ore is coating the sand grain. It's not in the sand grain. So what happens when the sand grains hit each other, it blows this coating off. It's a physical process. And so what happens then, you simply screen off that clean sand, just like a sand and gravel operation, and all the mineral is contained in the fines. So what happens is you can reduce it up to 10 to 1. Not all ores go 10 to 1. but it's easy to get 5 to 1. Of course, if you have clay in it, the clay, it's not sand, so that reduces your percentage. But in some more deposits, we've gotten 10 to 1, but easily 5 to 1. And it's a simple process that uses water and energy, no chemicals, and it doesn't produce any toxic waste, and it's a very low-cost project. You can do that. I'll give you an example. Milling cost, historically, probably, let's say at the White Mesa Mill, when we had our tolling agreement, the milling cost will probably $120 a ton. Kinetic separation is about $6 or $7 a ton. So what happens, you run it through the $6 or $7, and then you reduce it. You still have to put the higher grade through the $120 or $150 a ton process. But that's why kinetic separation is so valuable. It reduces the need for the big mills. You don't need those big mills. You reduce your milling cost considerably, and so it reduces your overall production cost. It's a patented technology, and it's going to be used at our mill, and it potentially could be used at other mills around the country. We're willing to license it to others. But again, we're the first ones to use it. It will reduce the cost of production around the world. Yeah. We've tested ores from Africa on it. It works. Nobody, of course, the prices of uranium haven't justified starting a lot of these mines, but with this technology, and there's other upgrading technologies that they've tried down in Namibia and apparently work. So this is not the only upgrading technology that's being developed, but you need to upgrade that ore before you mill it. And that's what the upgrading process of ablation technology does.
Yeah, sounds very interesting. But George, is your company looking for M&A, let's say in Utah, Colorado, or even surrounding states like New Mexico or Arizona, or are you okay with your 6 projects and you stop? You will stop?
No, we're currently looking at some acquisitions. Definitely, we think Utah, Colorado, Wyoming are prime states for this. We're not interested in New Mexico. New Mexico is going to be very difficult to permit anything. They've got excellent resources, but quite frankly, we've looked at New Mexico, talked to people down there, and until they clean up the mess that was made on the Navajo reservation, you're not going to have any new mines in New Mexico. And when that happens, I don't know. We see New Mexico maybe 10, 15, 20 years before any production happens there. But we think the states of Utah, Colorado, and Wyoming are very interesting. And we're looking at some right now. We don't have anything to announce, but there are some projects out there that we're clearly interested in. Not huge things. You're not going to find 100 million pound deposit you can acquire in the United States. There just aren't any. That could be mined in the next few years. There's some big deposits, certainly in Virginia. They've got an excellent deposit owned by Consolidated now, but who knows when that can be mined. We're looking for things that can be mined within the next 4, 5, or 6 years. That's our goal, is to increase production during that time frame, not 20 years out.
Yeah, but George, is this a search for an M&A, let's say classic search for a project from other companies, or we are talking land for staking?
We're talking about mostly from other companies. You could go stake claims now, but quite frankly, the good properties are already held by companies. If you know anything about the industry in the United States, the good properties were never abandoned. They were held. Certainly since 2004, 5, and 6. So you can go out and stake, grassroots, and I'm not saying you won't find something there. And some companies are doing that. But most of the good properties are already held by companies, and they cost more to acquire, but they have proven resources. And that's what we're looking for. We're not a grassroots exploration company. We don't need to find 100 million pounds. We have 100 million pounds. So all resources that we will acquire will be near-term production, relatively economic terms also. We're not looking for real low grade. There's low grade in the United States that's not economical and probably won't be economical unless you get $200 a pound. We're not looking for those type of things. So we look at the economics of these things and the term that it will take to produce them. And we are looking, and there are some interesting projects out there. Obviously, as the uranium price goes up, so do the price for these projects.
Yeah, but George, in your experience, is there available land for staking in known uranium districts?
Oh yeah, sure. There's land you could stake in known districts. Yeah, yeah. It's there. But again, what it is, there might have been a few historical old mines on it. And that indicates there's uranium there, but it's going to take a lot of drilling to develop. And you can go out and find uranium almost anywhere out here. But the quantities and the grades are the question. You know, you don't find enough and you don't find enough high grade to justify a mine. And that's what a lot of companies are going to find. You know, there's some companies drilling in Nevada. Nevada produced a little bit of uranium, but it was never a significant producer of uranium because the grades were too low. And that doesn't change. You know, over the years, the grades didn't change. And Nevada has uranium, but it's low grade. And that's the problem. You've got to have a significant deposit of relatively good grade to justify the economics. And that's why, you know, there's properties in Wyoming and Utah and Colorado that can be staked, and people are doing it. And they're drilling, they're finding some things, but now whether they're economical, we'll just have to see. But our focus is on economical near-term production and cash flows. That's how we're going to drive the value of our shares for our shareholders. This company should base the value of this on our cash flows in the fairly near future. You take a look at, you know, cash flows. The company that produces 1 million pounds, and our cash, you know, our market cap is only about 50 million US right now. The company with a 50 million market cap producing 1 million pounds a year, that's significant. Energy Fuels, if they produce 1 million pounds of uranium a year and they've got $1 billion market cap, that's not very significant. That's not going to drive their price to $2 billion, but it's sure going to drive our price. That's the whole goal of this company, is to cash flow significant amounts and drive the value of our shares based on cash flows.
Yeah, but why do you think your company is so much undervalued?
Part of it is that we've kept a very low profile until we had this mill arrangement finalized. Every question with interviews would say, fine, you've got some great deposits. You can mine the Sunday mine. They're permitted. They're ready to go. What are you going to do with it? Same question you asked. Where are you going to process this? How are you going to turn it into cash? We didn't have an answer for that until we had this. So we basically went silent for several years. Now we're ready to announce and tell people how we're going to turn this into cash. And our share price, I think, will recover because of that, because we now have the equation. We know how to do it. We have the assets to do it. But until we had the mill tied up, the consultants, the engineering underway, we didn't have the complete story.
Mm-hmm. Okay, got it. George, what is your current financial position? Will you need to do any financing soon going forward?
Well, we have about $6 million US in the bank. We don't need anything, but we will need financing. Obviously, it costs money to mine. We're gearing up. We're hiring people. So we will need additional cash, especially for our mining operations and to inventory the ore. Well, yeah, there's no doubt about it. $6 million doesn't get you to where we need to be. So we will be doing some additional equity financing when the time is right. We don't need the cash right now, but when the time is right, we will do it. Some limited amount. We figure, you know, just a general budget, another $10 million, we'll never have to do another equity raise.
Mm-hmm. Will you participate in future raises? I mean, my next question is skin in the game.
I will, yes. I intend to, I own about a little over 10% of the company. I intend to maintain that. So if we raise another 10 million, $1 million will be my money.
Okay, that's great to hear. And what about share structure? What is the current number of shares outstanding? How many warrants and options do you have?
Before dilution, about 44 million.
Do you have do you know the number of warrants and options maybe?
I think that brings us up with warrants and options to probably about 48 million.
Okay.
We've had recently some warrants that were exercised. Some of our warrants are in the money that are going to expire in February. We got about $5 million worth of warrants that are in the money. Okay. Some of them were exercised recently.
And George, can you please tell us who is on your board, in your team?
Our board consists of Andrew Wilder, who is an ex-fund manager. Brian Murphy out of Toronto, and myself are the board. We've got an excellent mining team. Mike Rutter is our operations VP, our COO. Our financial VP is Rob Klein out of New Jersey. Mm-hmm. We've got a very good staff. We don't have big offices anywhere. Our mining facilities are located on my ranch in Colorado, and that's where I'm speaking from. Our mining office is on the ranch. We keep a very low capital cost or operating cost. We've just hired, or we'll be bringing on a key individual mining engineer that I've worked with in the past. So we've got a few people coming on, but we don't staff up too much on the administrative end. We're mainly interested in the mining and milling. Of course, once we start that mill, we'll be hiring mill managers, metallurgists, chemists, things like that. Mm-hmm. But we've probably got the most experienced conventional mining team in the whole United States, simply because nobody else is doing much. But we've been able to hire the best, and we pay well. We're very competitive, even for a small company. You have to do that to attract the right people. And, we've been very successful at it. We hired 2 this week and interviewed 3 more. We're finding miners, out of certain areas, not out of Colorado necessarily, but are willing to come to this area. Mm-hmm. But we have to pay well. And that's why the cost of mining, people don't realize it goes up. When you used to, the economics at $40 or $50 are now $70 or $80, mostly around the world, but certainly in the US.
Yeah, definitely. George, before I let you go, tell us please about possible news flows from the company. When can we expect some news flow from which projects, let's say in the next 6 months?
Well, certainly there'll be some news flow on the drilling activities at the Sunday mine. News flows on our other mining activities there. We should have that out. We're going to do a little more drilling before we announce, the results of that. The mining activities there, we're gearing up with another team right now to derive the drift to the 43101 ore body. That's going to take about a year. So that will be announced once we've got the miners. We'll hire those within the next 3 weeks and start that project. And then there'll be news flow about the mill. Certainly we'll make some announcements of that within the next few weeks about our team that we've hired for permitting and engineering that facility. So there will be some news releases coming out. I'm attending the investor conference down in New Orleans next week, which we have not attended. We understand that's a very good conference down there. So this will be my first attendance down there. And then obviously we'll be attending the one in Vancouver in January and the one in Toronto in March. So we're becoming a little bit more active, and there'll be press releases on our activities.
Yeah, looking forward to see them. Okay, that was George Glasier, Western Uranium and Vanadium CEO. George, thank you for this chat. It was a great one. I wish you luck with all your projects, and I hope we will talk soon again after some big news from the company. Thank you, sir.
Thank you.